Hi, my name is Paul, and welcome to the 21st episode of my monthly stock portfolio series, where I invest $100 of my own money each month into Canadian securities. And I do this series every month to track the ups and downs of investing, so that I can show aspiring investors what to expect and what can be achieved by following a simple plan to regularly invest some of the extra money that's left over at the end of the month, even if that amount is $100 or less. In this month's episode, I'll be covering the second quarter financial results for one of the portfolio's holdings, and I'll also be going through how my portfolio performed during the month of August. Plus, as always, I'll be showing you exactly how I'm going to be investing this month's $100 and the dividends that were earned. Now, really quickly, before we get into the video, you should be aware that there is a link in the description box of this video to the goals and rules that I've set out for investing within my monthly portfolio. But if you happen to be someone who prefers watching videos to reading, then you can also watch me go through everything in the first episode of the series. And a link to the playlist starting at episode 1 is also available in the description box. Now let's get right into the news. And August was a very slow month with no important news coming out for any of the stocks held within the portfolio, aside from Goeasy's second quarter financial results, which I've already made a full video on. So I'm just going to briefly get through that, and then we can take a look at how the portfolio performed. This quarter, Goeasy once again put up some really strong numbers. Consumer loans receivable increased by 35% year over year. Plus, the business continued to grow its new loans by underwriting a record number of originations within the quarter. And this came despite Goeasy's recent focus on improving loan book stability, which is a process that involves turning down more customers with poor credit scores and instead seeking out secured loans, which basically means that the company is targeting safer loans so that they can achieve a more stable stream of loan repayments, or at the very least, some form of collateral in the cases where borrowers default. Now, all of this positive performance did of course lead to some very nice earnings growth, with the adjusted earnings per share hitting $3.28, which is up nearly 16% from last year, and that's awesome to see. Unfortunately, there is still that issue of the company's debts, which currently stand at $2.5 billion, with $180 million of that being added just within this quarter, which, to say the least, is a substantial amount for just one quarter. But the earnings are able to easily cover the interest, and this debt is being used to measurably grow those earnings at a very fast pace. So this isn't a huge cause for concern, in my opinion, especially since the company has access to over $820 million of additional debt. On top of that, according to the CEO, Goeasy is rapidly approaching the point where the business will be able to completely fund its own growth without needing to use any additional debt or issue any new shares, with a long-term goal already in place to work on delevering the balance sheet. And I have to stress that it really is great to see that the management is taking the initiative to set in motion a plan that is likely to rapidly reduce what I believe is the greatest risk to the business right now. And the good news doesn't end there. This quarter, Goeasy also had a record quarter for loan applications. And thanks to the company's 5 pillars, which I outlined in detail in my dedicated video on Goeasy's report, the company added nearly 1,000 merchants onto its network, where the company will offer its loans directly at the point of sale. Finally, we got the inside scoop on the Goeasy Connect mobile app, which will have its full version rolled out within the third quarter. And the app will be offering users direct access to all of the company's credit products and pre-approved offerings that will be tailored to individual customers and their needs. So, like I said at the start, almost everything to come out of Goeasy this month was very good news, except for the share price. See, this month, Goeasy was the portfolio's worst performer, starting the month at $128.45 and then ending the month at $119.16, which is a loss of 7.23%. Now, to be fair, Goeasy did experience a huge run of over 50% from trough to peak in just a few months before this month's consolidation. So some pullback at some point probably was to be expected, but I didn't buy any shares at these elevated price levels anyways, so this decline didn't really have any real impact on the performance of last month's invested capital. and Goeasy did not pay any dividend last month to cushion that drop in share price. Next was the Morguard North American Residential REIT, of which I purchased 6 shares, and over the course of the month, the share price had a minor decline going from $15.86 down to $15.56, which is a decline of 1.89%. But I did also receive $4.86 in dividends from Morguard, which was not included in the previous figure. Finally, MTY Food Group was August's best performing holding, but I only purchased about 0.17 shares last month at a cost basis of $64.63 per whole share. And while MTY was the best performer this month, the share price still did see a negligible decline in price, dropping to $64.58, which equates to a 0.08% decline. But again, this figure doesn't include the $1.58 in quarterly dividends that MTY paid out. Now, with all of my portfolio's holdings dipping in price, my total monthly performance came in at negative 1.7% if we don't include the earned dividends. That said, none of the benchmarks received dividends this month, and so without accounting for the dividends, my portfolio was the worst performer, followed by the Global Value ETF, which declined by 1.55%. Next were the 2 Canadian ETFs, which basically just broke even. And then the only positive performance of the tracked benchmarks in August came from the S&P 500, which increased by 1.59%. So overall, August was a bit of a slow month, and it certainly did not help my portfolio's performance optics. Since the start of the series in January of 2022, up until the market's close on September 7th, 2023, so far I've invested $2,047.55 of personally contributed capital and dividends. Unfortunately, the price of my total equity now is sitting at $1,971.79, which marks a loss of $75.76, or 3.7%. So, another step in the wrong direction for now, but like I said last month, I still have very high convictions in my holdings, and I'm excited to be buying shares at what I believe are heavily discounted prices. Though it does kind of suck to see the price tag drop back down below the amount I've personally put into the Wealthsimple account. But that's just part of investing, and without the patience and temperament to deal with short and medium-term price variance, we'll end up missing out on the long-term rewards that come with being correct and invested. Anyway, here we can see the all-time performance of my portfolio, shown in green, relative to my annual goal of a 12% return, represented by the red line with stars. And as you can plainly see, I'm now at the furthest dollar amount below the goal line in the portfolio's history, with the spread coming in at just over $220. But at least this current 10% deficit still isn't the furthest away from the goal line, percentage-wise, that the portfolio has been. In fact, back in month 9 of the series, my portfolio was trading over 13% below the goal. However, within just 1 quarter of that 13% difference, the portfolio was able to rally and surpass the goal line by over 5.5%. So, this current disparity is far from insurmountable, especially considering how quickly things can turn around in the market. That said, it might be a bit of a challenge to catch up to the S&P 500, which is now leading my portfolio by almost $300, and it's also ahead of the goal line by a strong margin. But as I keep saying, month after month, it's still early days for the portfolio, and anything can change at the drop of a dime. Speaking of dropping money, I've already put this month's $100 into the Wealthsimple account, and I need to decide what I want to buy this month. Fortunately, this isn't exactly a hard decision for me to make, since last month I already outlined why I liked the price that I was getting on Morguard North American Residential REIT shares, and since then the price has only gotten cheaper, so I'll be buying as many shares of MRG as I can, and I'll be putting the rest of the money into a fraction of an MTY Food Group share. Noting that, Goeasy is getting closer to a range where I'd feel comfortable buying more of its shares at, but we're just going to have to wait until next month to see if share prices dip down a little bit further. Okay, so it's Friday, September the 8th, and I'm here inside the account and I have $106.45 to invest. So I'm going to be putting most of that into Morguard shares. I believe we should be able to get 6 again. So let's buy that really quickly and confirm. And that leaves $12.67, which I will put into a fractional share of MTY Food Group. So let's get that done. All right, and I'll be back when that gets filled. Okay, I've just received confirmation that I have successfully bought 6 shares of the Morguard North American Residential REIT for $15.63 each, in addition to 0.196 shares of MTY Food Group at a cost basis of $64.64 per whole share, leaving my portfolio with no cash left over after my orders have been filled. So, as of the market's close on Friday, September the 8th, the portfolio holds 93 shares of the Morguard North American Residential REIT worth about $1,443, about 6.67 shares of MTY Food Group worth a little over $430, and the same 1.62 shares of Goeasy, which are now worth roughly $195. Now, getting into the dividends, both Morguard and MTY paid out a combined dividend totaling $6.44, which is enough to buy a 6-pack of toothbrushes, and that's more than a full year of toothbrushing once the portfolio can afford the accompanying toothpaste. So we're starting to come to a point where the portfolio's dividend income can actually contribute to some tangible, real-life benefits, minor as they may be. Plus, since inception, the portfolio has now earned $53.99, with over $36 of that coming in year to date. And that's well over double the dividend income that was earned in the first full year. On top of that, next month, we're projected to receive an additional $5.22 in dividends. And that's the lowest dividend payment month in the quarterly cycle, since the only dividend payer next month is going to be Morguard. Now, with the recent portfolio additions, if I were to just leave the portfolio as it is and collect the dividends in cash for the next 12 months, assuming no changes were made, I would now expect to receive $79.86, which is a 5.89% increase from last month. And this moved the yield on contributed capital up 3 basis points from last month to 3.8%. So we're really starting to make headway towards achieving an additional month's worth of personal contribution each year, but in earned dividends. And that's something that will hopefully be achieved by the end of this year. And I actually think that we're likely to hit that, especially if we end up getting some decent dividend hikes. But I'll have a lot more to say on that topic in next month's video. And with that, I want to quickly give everyone an update on the market cap video that I was having issues with. And it's all good news. Aside from a few file conversion issues, my desktop computer was easily able to handle the rendering process, and the video is set to be released this Friday. So I just want to say thanks to everyone for bearing with me taking so long on getting an essay-style video released. I appreciate all of your continued support, and I'm always elated to see how many people are watching my videos. Thank you all so much. But that's all that I have for this episode, so please remember that this video is not financial advice, and that I am not a financial advisor. This video was made entirely for the purpose of providing inspiration and insight into my personal investment decisions, and it should not be used as a substitute for doing your own research. This video does not have the information required to make good investment decisions on individual securities. So again, I'm not a financial advisor, I'm just a Canadian who likes to invest and share my opinions with others. And in doing so, I hope that I was able to provide you with something of value. And if I did, then please consider sharing it with anyone else that may also benefit from it. Thanks for watching all the way to the end, and enjoy the rest of your day.